Hello and welcome to Blocks Live TV. Today is Thursday, June the 20th. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City and 2:30 p.m. in London, 10:30 p.m. in Tokyo and 3:30 p.m. here in Malta. Well, crypto experts Kevin Mirko and Jason Fernandez are joining us on today's show. But first, let's take a quick look at some of the market indicators. The cryptocurrency index CCI 30 has remained near the 4,600 point level. It's virtually unchanged so far in June, but it's up by a massive 110% year to date. The 30-day Bitcoin volatility index stood at just slightly more than 3.4% yesterday, after dropping south of the 4% mark yesterday. The CoinMarketCap website's 24-hour traded volume indicator has remained near the $50 billion level after the website introduced a new calculation method on Monday. The Messari website's so-called Real 10 volume has slipped below the $2 billion mark. The Bitcoin dominance indicator has returned back above the key 57% line. The top 5 digital assets are mostly trading in the red. Bitcoin rose above the $9,300 level, but some of the gains have been given up. Ether has been facing resistance around the $270 range. XRP is trading mostly sideways, close to the 43-cent mark. Litecoin has retreated slightly from the $140 level. And lastly, Bitcoin Cash wraps up the list, standing almost 2% in the red to decline below the $410 mark. The Coin 360 heat map showcases why the Bitcoin dominance is on the rise. Most of the digital assets are in the red, while Bitcoin trades up by 1%. Well, according to the Token Spread website, the XMO and Bitfinex exchanges have the biggest arbitrage for the Bitcoin dollar pair, and it's under 1%. The XMO exchange has the biggest spread for the same pair, and it's slightly more than 0.1%. Today, we'll take a look at some of the characteristics of Beam. It's a scalable and confidential cryptocurrency that uses Mimblewimble protocol. Well, this gives users complete control over privacy and all of the transactions that are private by default. Well, on top of that, no addresses or other private information is stored on the blockchain. There was no premiere or initial coin offering, and this digital asset are backed by Treasury. The price of this coin peaked at nearly $3.20 in January, while as of today it trades at just under $1.50. We'll now review the performance of the various cryptocurrency asset classes as grouped by the Messari website. We'll start with the infrastructure group, which stands almost 1.4% in the red. The MaidSafe coin is one of the only assets trading in the green, and it's up by double digits. The media and entertainment category is down by less than 1%, as this group shows a generally mixed performance picture. The financial sector is the top decline, with a decline of 1.8%. There's red across the board. The currency category is down by 1%. Bitcoin bucks a generally bearish trend with a slight increase. And lastly, the services section is almost unchanged. The MaidSafe coin and Dent token both have surged by double digits. That's where the 5 major cryptocurrency categories stand so far on this Thursday. Well, lastly, we'll provide you with an overview of the most significant increases and the biggest drops among the top 100 digital assets. Let's take a look.
different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
We're back, and joining us on the line we have Jason Fernandez, COO and co-founder of AE Token. Jason, it's great to have you back on the line with us today.
Hi, Jessica. Thanks.
Always a pleasure. Now, we've seen a lot of money moving around the crypto space, and I want to jump straight in and get some of your opinion. We have seen that voice.com domain has recently been sold, and the announcement was made it was sold for $30 million. It was then used by Block One to launch a new blockchain-based social media platform. Obviously, we spoke on the show a few weeks ago about this Justin Sun bid of $4.6 million for a charity lunch with Warren Buffett. If we look at this money that has been bouncing around the crypto space, is this a sign that the bull market is back?
So I think the clearest sign that the bull market is back is when you look at crypto market cap in general and also the volume. Justin Sun's $4.6 million bid really didn't cost him anything because he made up for any losses by the massive amount and millions of dollars in free advertising that he basically got. I mean, it became a whole meme where people were talking about who were the 10 people that Justin Sun should pick to have lunch with Warren Buffett. So it really, it was a really good deal. Justin Sun is an amazing marketer because it certainly didn't cost him anything. As far as EOS is concerned, Block One and EOS are one of the biggest players in the space. So it certainly seems like they would have some money to throw around to buy voice.com, especially if they're going to make a realistic play for the the social media market, which has been pretty well taken over right now by Facebook and Google and pretty much everybody else. So if they're going to make a decent play, having a good domain is number one, and certainly they have the money to do so. What we haven't quite seen is the gains in the crypto market cap sort of trickle down to the crypto job market yet, and that's because a lot of these companies are not getting the funds. I mean, there are hardly any new ICOs, and so I've seen statistics that crypto jobs spiked somewhere around 2017, but it's been pretty much downhill ever since, and it hasn't quite tracked the increase in crypto that we've seen over the last several months. That hasn't quite trickled down to more jobs for the crypto industry.
That's an interesting point, and something that we have spoken about a lot this week, and I think people are still looking for some more information. Facebook launching their Libra cryptocurrency project. It remains one of the talking points. We discussed this yesterday on the show, Jason, but is there anything else that you've noticed or anything else that you'd like to add?
Yeah, one thing that I wanted to point out is that Libra is basically just backed by a basket of cryptocurrencies. Sorry, backed by a basket of government-issued currencies. So that's in contrast to Bitcoin that has its own predetermined apolitical supply schedule. So it's a huge difference right there. Also, Libra is going to be highly regulated. Obviously, you have some of the top companies, large companies. They're going to need they're going to be under a tremendous amount of regulatory scrutiny, and essentially the governance of Libra itself will be done by a consortium of pretty traditional companies. I mean, we have Visa as part of that, so this isn't really going to be full-on disruptive. Also, the inability of Facebook's Libra to operate in a permissionless manner puts into question, basically calls into question whether it can actually be considered a cryptocurrency at all, a real cryptocurrency, at least in the vein that Bitcoin is a cryptocurrency. And if you consider the wrath that the Winklevoss twins experienced when, because of their association with the custodial app, it was sort of a regulated cryptocurrency payment app that allowed users to spend Bitcoin and altcoins at essentially Starbucks, Whole Foods, and other retailers. You consider the backlash that they got from supporting such a highly regulated app. You can just imagine the kind of backlash that Facebook is soon to see, because you're going to have to you add that to essentially all the privacy concerns that are pretty huge among in people's thoughts right now. Another fact is that they've already announced that they're not going to launch in countries where cryptocurrencies are banned. So that would probably be an oblique reference to India. So we're talking about 1/5 of 1/6 of the world's population that is just not even going to be a possibility. And then if you add up all the regulatory hurdles in every country, it becomes an increasingly a difficult proposition as to how Facebook is going to be able to be regulated, have itself regulated in multiple different countries to get the kind of critical mass that they need to actually be successful at something like this. So I'm skeptical. I think that it's going to bring a lot of attention to cryptocurrency, and it's going to bring a lot of legitimacy. And certainly they're doing something really revolutionary. At least they're trying to do it. But the question about whether they're actually going to be able to pull it off, given the regulatory hurdles that people that have been following the Bitcoin market are all too familiar with, that remains to be seen.
And I think you've made some really interesting points, because if you do have a look on Twitter and try and gauge some of the market consensus and people and their opinions for Facebook and for Libra project, the partners certainly are impressive, but you have made some interesting points there. So do you think it's going to be fairly impactful but not as significant as maybe some people are expecting?
Yeah, I agree. I think look, it depends on how it actually comes about in reality. I think one of the partners has already signaled that if there was too much opposition, that they would pull out, which doesn't seem like they're fully backing this as much as you'd hope. And you would need basically iron will if you're going to be able to go up against regulators in multiple different countries and essentially battle them to get your coin. I mean, privacy is one of the hugest problems that they're going to have to get around, because they say that they're going to create basically a subsidiary. They're not going to have access to any of your transactions and connect that to Facebook, but they're going to have a subsidiary company that does have access to their transactions. So how they're going to have some sort of Chinese wall, and how we're going to, as customers, Facebook users are supposed to trust them to maintain that separation. It's something that I think people are right to be skeptical about, and I think regulators should be asking a lot of questions.
And another thing that might be kind of turning people a little bit more to digital assets, and especially adding some of the appeal and some of the reasons why people are in this space, if we look at what we've seen from the Italian government and other governments as well for that matter, they're also considering taxing cash and other valuables locked away in safety deposit boxes held in banks. Do you think this could be one of the driving factors that are turning people to digital assets?
Yes, actually I do. I think restrictive laws all around the world are causing an overall move to crypto. And it's sort of this chicken and egg thing, because when you have restrictive laws that are encouraging people to move to crypto, you have governments that find them their control over currency, which is something that they've basically taken for granted for centuries now, that they control over that as being sort of the exclusive people that have the ability to create currency or ascribe value to currency. When they see that grip slowly fading away, they're fighting even harder. So it's sort of this escalation on both sides. And if you see, and that's actually as the countries become more restrictive in how they look at cash and how they look at payments, that's going to encourage a lot of people to move to crypto. So if we've learned recently that India is considering taxes on people that withdraw more than $14,000 a year of their own money. So if you have essentially over $14,000 in your bank account and you happen to withdraw it for some reason over a year, over an entire year, $14,000 is not that much money. And if you were to just withdraw that over a year, you would have to then start paying tax on that cash, which people want financial freedom, and financial freedom to spend without sharing that information with Big Brother. I mean, everybody does expect there to be a Big Brother to some extent, so to speak, but the more restrictive it gets, the more people are going to be inclined to move towards crypto.
And that's essentially where we're seeing more countries, and specific countries as well. Venezuela is a fantastic example, move towards cryptocurrencies faster than others. We've also seen something which is the extradition bill that's been passed in Hong Kong. It has caused protests, and Mati Greenspan from eToro, he's recently tweeted that Bitcoin trades at a premium of more than $100 on the Hong Kong-based crypto exchange TideBit. Is this a good example of just how safe haven flows can drive the price of Bitcoin higher?
Yes, so like I said, wherever there's restrictive laws, people are going to try and get around it. And pretty much the more government tightens the noose, the more people are going to be looking at other options. So now traditionally in times of economic, political, or social crisis, you have gold and safe haven currencies such as the Japanese yen that have benefited. Bitcoin has only now joined this sort of elite league, and that's been demonstrated both in Hong Kong and elsewhere, where sort of Bitcoin has been treated as a sort of safe haven currency. So last week we learned, I mean, Reuters reported that a lot of Hong Kong elites had started moving their assets abroad over concerns over the extradition law, and that's a big deal because there's something like 853 super high net worth individuals in Hong Kong, and super high net worth is people that are worth over $100 million, and so this can have a really huge impact if a significant amount of them decide to move their money abroad, and they do so via Bitcoin or other cryptocurrencies. So and another thing to note, which is also interesting, is that this isn't the first time that Bitcoin has been tested as a sort of safe haven currency, and not even the first time this year. So as trade tensions between China and America heated up, a few months ago, that was a few weeks ago rather, that was a really huge issue. That too resulted in a rise in the price of Bitcoin. So that's starting to seem like Bitcoin is exhibiting some of those safe haven properties that we're used to seeing in currencies like the Japanese yen, for example.
And that's an interesting point, because I think it was Anthony Pompliano that actually tweeted out and said that you're seeing a negative correlation between the Japanese yen, which, as you've correctly said, is a typical safe haven currency, and Bitcoin actually went up, and we did see the yen fluctuate a little bit as well. So just finally today, Jason, the CME Group tweeted that Bitcoin futures show growing signs of institutional interest. Open interest rose by a record of 643 contracts in a single day, establishing an all-new time high of more than 5,300 contracts for June the 17th. Is this one of the signs that there is more room for some upside price potential?
Yes, I think so. I mean, CME has been enormously successful at Bitcoin futures, particularly if you compare them to the CBOE, which bowed out about just recently. CME has also done a much better job at promoting it, much better job of marketing Bitcoin futures. One of the things that CBOE did, which was wrong, was that they pretty much put it on some exchanges that were not likely to see people that are going over there to buy Bitcoin futures. So it was basically the way they actually set it up. It was sort of set up to fail. CME, on the other hand, has slowly been growing the amount of basically record numbers, basically record contracts, and contracts that basically talk about the future, right? So that indicates that people are really positive to where they see Bitcoin going. And I think I'm very positive about CME in particular, because they've really been at the forefront and have just sort of blown CBOE out of the water. That's pretty much why CBOE bowed out just recently.
So we've talked Facebook today, we've talked some kind of economic instability and that potentially driving up the price of Bitcoin, and lastly we spoke about CME. Is CME the thing that you're most optimistic on that actually could be seen as a price driver for the crypto market?
Well, not just the CME specifically, but in general, when you talk about Bitcoin futures, backed is something that we are all waiting for rather eagerly. I think that that's going to put a lot of pieces of the puzzle together, particularly from a regulatory standpoint, because if the SEC is able to work with back on certain regulatory hurdles that have basically stopped it thus far, that could be a prelude to Bitcoin ETFs becoming a reality. So I certainly think that we're going to see this, because of the CME, we're going to see probably back a little faster than we would imagine because of the success that CME has seen. You're probably going to see a lot more interest and a lot more investment from back to try to get the thing off the ground. And then post that, you're going to see Bitcoin ETFs become a reality, hopefully if the SEC gets on board.
All sounds very exciting. Jason, thank you so much for joining us on the line. It's always a pleasure to get your insights.
Thanks, Jessica.
Thank you. Well, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto markets. Now, the markets have been mostly trading sideways, and Bitcoin holds the ground above the $9,200 level. The CoinMarketCap website's 24-hour traded volume measures at just slightly more than $50 billion. Ether has shifted towards the positive territory, and it trades at slightly less than $270. Well, that's all for this Thursday's Crypto Now live show. We thank Jason for his expert analysis. I'd also like to thank you, the audience, for joining us, and invite you all to accompany us every weekday at this same time.